I'd like to welcome my panelists today. So Ekaterina Autet, Senior Investment Officer at IFC, Stephen Barrie, Deputy Chief Responsible Investment Officer at Church of England Pensions Board, and Jamie Strauss, CEO and Chairman at Digbee. So maybe first to start, we could have an introduction to your background and your professional experience.
I'm Ekaterina Autet, and I am a Senior Investment Officer in the Metals and Mining Division of the International Finance Corporation. So International Finance Corporation is part of the World Bank Group. We are the private sector arm, basically, working with private companies, private sponsors to support economic development and climate goals. And our World Bank Group's shared mission is shared prosperity on a livable planet. I'm also part of the Climate Smart Mining Initiative that I represent for the mining team. I've been with the IFC for about 3 years, and I've joined from an investment bank where I also worked in metals and mining. It's nice to meet you.
Hi, I'm Stephen. I help lead the investment team at the Church of England Pensions Board, which is a small asset owner, about 3.5 billion sterling, and my responsibilities are in the realm of stewardship. So how we ensure that our investments are fit for the future, including environmental and social and governance considerations. So there you go.
Hi, I'm Jamie Strauss. I'm the founder and CEO of Digbee, which is an ESG assurance platform specific for the mining industry. And my previous background is in the finance industry here in London.
To start with, how do we define responsible mining, and how has it evolved over the last months or years from your perspectives?
So, Stephen, we spoke just before this, and I was going to pass the buck on to you on this one.
I think you had two very good, succinct points that if you go first, I'll...
The definition of responsible mining is a hot topic, but really it comes down to me is to meeting best practice and also engaging both transparently with multiple all different stakeholders of your stakeholder mapping. So it is as simple as that, although I am sure there are others who can then not only pick holes in it, but also expand on that. But it's a hot topic of a question.
I think at a high level, you're exactly right. It's about best practice in making sure that mining companies are sensitive to the dependencies and the impacts that they have, as well as the bottom line of the business. The way that mining companies and the mining sector interacts with their stakeholders is a critical part of what responsible mining looks like. And that's at the high level. When you get down to the detail, in terms of what for any individual site does responsible mining look like, well, there have been various attempts. There are various interesting attempts to define that. So so IRMA is one standard that tries to define that. The Consolidated Mining Standard Initiative is trying to bring together 4 attempts at defining responsible mining. And there are various others. There's the Investor Commission for Mining 2030 is trying to develop a vision for what responsible mining looks like by 2030. And that's released a landscape report in the last month or so. So it's a hot topic. There are lots of kind of subtle challenges when it gets down to the kind of site level. But in general terms, it's about thinking broadly and holistically about the dependencies and impacts of mining projects.
Well, I think you've basically said it all. I'll just add that at the World Bank, we've established an initiative, I think it was 2018, which is called the Climate Smart Mining Initiative, that defines responsible mining as a sustainable way to produce and process metals and minerals needed for the energy transition by minimizing environmental, social, and climate footprints and throughout the whole value chain. So that's our official definition. And as part of the Climate Smart Mining Initiative, we work towards, for the IFC side, supporting the private sector into sharing the best practices, convening, and for the World Bank focuses on the public sector analytics and government support for the responsible mining.
I might just add one other comment. I think from a slightly practical point of view, I think there's a lot of focus on the climate and specifically CO2. And I think if we look at the underlying problems of the mining industry, the main challenges with which the industry have, it very much comes down to the other areas, not so much the CO2 side. So how do we interact with local communities and the more and more so with local biodiversity and other things. And I think the balance of responsible mining perhaps needs to, well, at least from our perspective, needs to be more broadly between all the different attributes of responsibility rather than the dominance of CO2 and how that plays out. Not to say that that's not important, but it's perhaps overweight.
Okay, and so you mentioned briefly there certain metrics that you use, but are there any others, industry standards that you go by, and how do we assess companies on that? Like, what are the metrics that you're using?
Well, I'll start off then so there isn't a set industry standard, and I think that's been the confusion. And not unique to the mining industry, but in the case of the mining industry, there isn't a set standard. Having said that, I think the industry has come quite a long way to try and harmonise. It's not a one single set, but as Stephen just highlighted, we've just seen some recent announcements from the Consolidated Mining Standard, which has just come out, driven by ICMM, TSM, Coppermark and World Gold Council. That is a multi-stakeholder approach, and I think that's got to be welcomed. I would say, particularly for the audience here in London at this conference, is that it is particularly focused towards facilities, which is defined as producing assets. And I think that is hugely disappointing, because how can we create the new mines of the future if there isn't direction given to the smaller companies in which to efficiently, ultimately lead to responsible mining. So I think that is a challenge, but that's not to say the work they've done is anything other than brilliant from the point of view of trying to be more harmonised, but it is limiting.
I think the benefit of having a really defined standard for operating sites is that anyone in the exploration phase can look forward to when the site's in production, say, we're going to need this kind of infrastructure, these management processes, these reporting frameworks to be in place if we're going to meet the global standard. So the fact that it doesn't name specific requirements for explorers, it's still kind of naming requirements for the future of that asset that's under consideration.
And absolutely, and from our perspective at Digbee, we will incorporate CMSI into our amalgamated frameworks and very much therefore become hopefully a leader with regards to helping these juniors to effectively get there and be prepared to then ultimately go off and do that the CMSI or other standards, whichever they choose when they get into production. So yes.
I should declare, it's not quite an interest, but I've been sitting on the stakeholder advisory group of the CMSI, and it's out for consultation at the moment. So I think your feedback and the feedback from the room would be welcome. The deadline's the 12th of December for that.
I'll get my pen out this week.
Yeah.
And on the back of that as well, how can companies best present the work that they're doing? So how do you let people know what you're doing in terms of ESG?
Well, maybe I can start on that.
Please.
And just to add for the IFC, our guiding principles, the IFC performance standards, which are part of our sustainability framework, and that really are directed to the clients with the goal of helping them understand the impacts and risks and manage and mitigate them if needed in a responsible manner. So that's really a guideline. It's not specific to the mining industry, but we in the mining industry use them as well. Now that's the compliance with standards and evolving standards is an industry-wide issue, and the thing is, even though all producers face it, they don't face it in the same manner, and they need nuanced approach. So when you work with large international corporates, obviously they are better resourced to deal with the sustainability challenges and sustainability opportunities. They're also much more aware of given the regulatory pressure, given the customer expectations, public expectations. But as you rightly said, when you work with juniors or with emerging producers, it does depend on who you deal with, because either you're working on a greenfield mine with someone who is ready to take on the new challenges, who is ready to make sustainability part of their journey and mission statement, or you find yourself finally with in situations where people are just not equipped and do not have resources to deal with the sustainability frameworks and challenges that come with them.
One of the things that we've seen as an institutional investor with a broad portfolio of investments is that the standard ESG metrics, environmental, social and governance metrics, are aggregated and at a pretty high level, and they don't necessarily reflect the most pertinent, the most relevant responsible investment considerations for mining companies, and that there's a real risk that the mining sector is unduly penalised by these metrics, especially in the light of the necessity for the products of mine sites, for the climate transition, just generally for the global economy. We've the landscape report of Mining 2030 that I mentioned cites 45% of the global economy as being underpinned by mining, which is why we've taken this as a topic of systemic interest for global long-term investors, and really emphasised the importance of responsible mining because of the importance of the sector. So there's a risk around ESG metrics that they're not specific or granular enough for investors to really understand the challenges or to do the right kind of benchmarking against peers. And as a fund, that's led us to take particular topics and try to develop a way of approaching those. So the Transition Pathway Initiative is a climate assessment tool that applies to mining companies. The Global Climate Lobbying Standard looks at the consistency between large mining companies' climate positions and the lobbying positions of the trade associations that they invest in, and that's led to some shareholder resolutions that we've co-filed at some mining companies in the past. We've been focusing on methane emissions as part of the Climate Action 100 Plus. So not quite CO2, but CO2 equivalent, the important metric there, as a kind of underappreciated challenge, especially for coal miners. So I think there's an increased willingness for long-term investors, large institutional investors, to lean into the sector because of its systemic importance, to try and understand the particular issues that you guys are grappling with when you're trying to operate sites, and to help. I mean, it's in our interests, it's in everyone's interests for the mining sector to succeed and to operate responsibly. So that explains why Mining 2030 is backed by about $15 trillion of assets under management. You know, it's a kind of mainstream, it's not just a Church of England initiative, it's backed by mainstream investors. So, yeah.
If I could just add, so I think that the question really was, how can companies best present the work that they are doing? And I think the first thing is we've got to ask ourselves, and this slightly takes on from both of you, but on to the next stage, and any company that is here is, what is the purpose of trying to communicate this? I mean, to some extent it is compliance, and there is an increasing amount of compliance that is required. I would argue, while that generally moves in the right direction and helps society and everything, it doesn't necessarily, because of the differential in the way that companies are valued, doesn't necessarily always relate then to this is good for us relative to everybody else. We're just becoming compliant. My argument really, or my position is really stems from an article that I wrote and published about 10 days ago, where I was asked by a very large exploration company in Canada to review their sustainability report. Now, the sustainability report is the report which most companies will use to get the information out into the public domain. Most junior mining companies are not obligated to produce a sustainability report. Now, when I did this, it was a really interesting exercise, and I really came to the conclusion is none of these companies, this company had not asked itself, what is the purpose of writing this report? To whom is it directed to? And what is the value add with which in doing this? Because they could have put a lot of this information into their MIC or annual report at virtually no cost. Instead, it is rumoured they spent $400,000 to produce this. So if you then go down and then you kind of ask, okay, what is the purpose of this? Well, the purpose ultimately is to bring together all of the information over the course of that year and to identify and then to present it in a way that is then usable for whoever you're trying to direct it to. And in the case of a junior mining company, let's be honest, it's largely investors and also local communities and local regulators. So if you then take it from there and say, right, well, what do investors and ultimately what do the local communities want? Well, they want something which is where they can deem ultimately to describe this company as being responsible. So putting out a non-standardized, non-comparable, one-sided, with no independence report adds absolutely no value to that company. And it's a complete and utter waste of money. That doesn't mean to say sustainability reports cannot be valuable, but I don't think the questions have been asked, what are we trying to achieve with this and the values that we're trying to give? And if you go and talk to institutional investors, well, we have institutional investors here, they want standardization, they want comparability, they want future looking, they want to have KPIs which they can hold companies accountable to. And then you can begin to get more confidence and trust within whatever sector we're talking about, within this sector, which therefore will lead to more money coming into it. So the question is, how can companies best present their work? I think we've just got to be more open and transparent. It's not, in most cases, if something has gone wrong with your local community, you're never going to have 100% success. So if we're more open and transparent with this, and then identify the risk mitigations that we've taken from that, far greater confidence and trust is going to come into this sector. If we can do that, and if we can do that, then we can encourage new money, lower cost of capital, increased valuations, etc., that come with that. So if anybody's interested in reading the report over the weekend as they sit and enjoy themselves, then it's on the Digbee website under the news thing. Oh, no,
Jamie,
it's going to be tricky.
Send 3 copies, because our whole family will be on it all weekend. No, I was just asking, Stephen, your question, your point, which is massively relevant, possibly the most important point made, is 45% dependency on mining activity. Just definitionally, did that include other extractive industries other than the ones here, like quarrying and aggregates, construction materials? Is that under your embrace and review?
The full details are available in the landscape report
Right.
on the Mining 2030 website under the news.
But I mean, does it
section.
include other extractive industries like quarrying and aggregates extraction, etc.?
On quarrying, I'm not sure, but
Yeah.
it's a focus on critical minerals and metals and base metals. That's where the focus is. Yeah.
Okay. Because people tend to think, oh, copper, nickel mining. Actually,
Yeah.
the biggest and some of the most disruptive mining activities are quarrying and aggregates, so construction materials.
Yeah. Sand, yeah, indeed.
sand.
Indeed, yeah.
But but that 45% figure is including that or not including that?
I'll have to check the
Okay.
details, but
I've left oil and gas out of
Yeah,
it
yeah.
because that's obviously not even
I can
mentionable.
give you the details.
yeah, good.
Do we have any other questions? Yeah.
I've had the fortunate experience of sitting through a couple of these panels in the last couple of days, and a couple of the panels have raised some very interesting points, but one of the points that came across in the panel discussion was that the mining industry is decreasingly processing its product. And I was going to ask a very horrible question, really. Do you think that the efforts of you guys in making the companies have these very high standards, which includes pollution and whatever, is just driving all processing into China? Which basically is what's happening. That any sort of critical, difficult processing of horrible material or even ordinary material is increasingly being done outside the mining industry as we know it in the capital markets. I think, to some extent, we are very hard on ourselves, and as society, that's what we want. But it does have repercussions, and the repercussions are that we're not processing much because it has a lot of pollution. If you look at, as a horrible example, what's happened in the nickel industry, it's all done in Indonesia. You don't want to know what's happening, but if you have aerial photographs of what's going on around all those processing units, you wouldn't want to live anywhere near that. And that happened in lots of industries around the world in the past. Australia was an example, in Tasmania, where we did all that as well. And then, of course, we don't do it anymore because, well, we can't. So the question is really, do you think that we are driving the mining industry away from processing because we're being very hard on the standards that we set them?
Well, I'm not sure really. I mean, obviously there's this trend, and I've been at a conference recently where a participant said it used to be NIMBY, not in my backyard, and now it's banana, built absolutely nothing anywhere near anything. So that's anecdotal, but I think in practice what you have in place is a different trend also with Western countries trying to make sure they have at least some path to partial self-reliance and self-sustainability in critical minerals. And that calls not for only just mining, but also processing. So we do see initiatives in the processing space. And nickel may be an exception to the rule, but we do see that in other minerals where there's a trend of trying to establish processing capacities in other jurisdictions.
One of the challenges I would offer back to the way that this question is framed is that it presents high operating standards as a burden that makes companies not competitive. The kind of catastrophe that you see in the mining sector that can be mitigated by good standards, good operating standards, those kind of catastrophes are company-ending events. So there's an important risk mitigation element in high standards. You can't just see it as a unnecessary cost in the geopolitical field of mining. I think there may be, there obviously are costs associated with implementing good standards. But I don't think we should see that as the primary, or even the primary driver of the changes in the geopolitical makeup of where different parts of the mining sector are located. I think there are some very deliberate plans, Belt and Road plans, for example, that involve critical minerals, for example, as a target, and I think that's part of the dynamic for sure. That rather than just high standards being costly, driving processing elsewhere. There's a temptation in this space to see investors as just demanding high standards of companies, whereas regulators have an important role to play as well in avoiding the kind of environmental impacts and the kind of disasters that we've seen in the sector in the past. And I think investors are increasingly interested in engaging with regulators in not just in the mining sector, but in relation to climate change, in relation to biodiversity. We're seeing that. And for example, the Global Industry Standard on Tailings Management started as a voluntary initiative among ICMM companies and then the wider sector. It's a standard that is not trivial to meet. It's now supported by 65% of the mining sector by market cap on the major exchanges. And 2 countries are now incorporating it into their regulation. So it's not optional. It's not a voluntary standard in those countries. And I expect that sort of standard and that sort of trajectory from a voluntary standard that has the confidence of the industry and investors being then enshrined in regulation and becoming the level playing field of minimum standard I expect we'll see that more in the future. And it's the kind of thing that investors will advocate for more in the future, because when things go wrong, they can go wrong in large ways that will be company-ending events. Now, that I've spoken quite a lot around your question, but I think it's relevant. So, yeah.
I would just add, which actually follows on a little bit, is I think it is somewhat disappointing that we see ESG as just a compliance-only process. And ultimately, if we look at this, it's a risk mitigation process. And risk mitigation, whether or not you're talking reputational risk, portfolio risk, or operational risk, should ultimately lead to better outcomes. And better outcomes should lead to a higher valuation. Now, I think your point is more down to price of product or the cost of the product.
No, it's more to do with the complexity of treating material. If you do have high standards to meet environmentally, it is very. What you find is that what we're finding is that the listed mining companies and resource companies are not investing in those industries because it is too hard. Mm-hmm. And that's my point really, is that the processing of the raw material is increasingly, seems to me, to be being done by the either non-compliant or let's call it Western mining companies. So that's what I'm saying, is that I'm not decrying the process. I think the process is excellent and we need the process, right? What I'm saying is it just seems you're driving, the process is, and other things besides what you guys are talking about, is driving the complicated, more polluting areas into the hands of other people.
Yeah, I mean, to some extent, China just got on top of this bandwagon much, much earlier and got the installed capacity in place to address all of this. And the Western governments have been slow to act to support. And that's probably a wider conversation beyond today. And I would argue that, this is a transition with which hopefully it will ultimately lead to the Western governments having stronger strength to be able to support the industry to address your point. But we need to effectively, and I think it's also wrong to, and I'm not suggesting you're characterising, but I think it is generally characterised that China doesn't have any controls and the West does, and that is the cost which is forcing it. I'm not sure. I mean, there are many Chinese companies which I think sit on a very strong stand footing with strong environmental and social things, particularly in more recent years. Zijin, I think, has been particularly well highlighted by some on that. So I think we as a group or as an industry is wrong just to say that China doesn't have good standards. There are clearly good and bad actors.
I would disagree with that very strongly, but we look at the antimony industry as a very good example in China. You would not want to be living anywhere near what they're doing with antimony in China. Why does no one else do antimony? Because they haven't got a process that commercially they can do to compete against the Chinese, who don't have that.
Yeah.
You can say that the Chinese have standards. Yes, they do, I'm sure, in certain industries, but there are a lot of them, particularly in the mining processing area, they don't.
I think your point here is the mining processing area particularly, where the West has been behind the curve. Yeah.
Okay, so as an investor, what do you want to see from juniors moving forward? I guess, Ekaterina, we can start with you on this one.
Thank you. Yes, I think, speaking for the IFC, obviously we would want to see compliance with our performance standards. That's really basic, and we want that for all our investments. What we'd also like to see is a long-term vision, because as an investor, we take and hold, basically. So if we invest in the new mine and our financing tenor is 15 years, then we're going to be there for 15 years. We're not like some investors that would, arrange your financing, then quietly sell it on secondary and then just keep the name and not get involved. We tend to monitor our investments, and that's aligned with our development mandate, because you can't make sustainable change in a year or two. You need time for that. So our investments are long, and we expect our clients to also see the long picture, the big picture of what they do, how they mine would set what the neighboring communities, how the asset would perform, not only in terms of operational and financial, but also how it would perform vis-a-vis the people that live around that place. What we also do is, obviously, we do recognize that not everyone is equipped to deal with sustainability challenges, and as I mentioned previously, some are just by their nature and the size of the companies are just better resourced than others. Then what we do is we offer support. It's never obligatory, but if the client wants to move beyond strict compliance with regulations, if they want to do more, if they want to improve their footprint, then we have teams that can help them do that. And again, that requires longer tenure of engagement, because that's not done in a year either.
So the only one thing I was at is I interviewed somebody last year on exactly this point, and he was very clear in fact it was in this room, and it was very clear what investors wanted, and it really goes back to that earlier thing, is they want clear, standardized, comparable data, which is future-looking, much to what you've just said, Ekaterina, so that there are clear things with which they can hold people to accountable for, and therefore showing that longer-term vision. And if we can do that, then obviously then you can bring this industry into the wider theme, which other industries already do.
So the industry has a hard time with public perception. If we were to achieve that and build trust in the industry, how would that benefit? What would flow from this if we were to achieve that trust and build the repertoire of the industry, I guess?
I mean, the goal has got to be more money in the system with a lower risk and a better outcome. And if we can do that, that works for stakeholders, investors, and the companies themselves. And it reminded me of Mark Cutifani, who I think is probably celebrated as the most successful person within the mining industry on this sort of topic and revitalizing one of the majors, is that, and I remember him standing on a stage at the BMO conference, I think it was in around about 2019, and he was really being pummeled about saying, well, why are you putting all this money into ESG and this and that? And he basically said, every single thing we do has a return on capital employed attached to it. And if it doesn't meet the hurdles, then it cannot go forward. And to me, that's always been, this has got to add value by lower risk and ultimately having a return ultimately to shareholders, which ultimately, the value doesn't always have to be at the MPV or whatever it has to be. It could be just a lower risk, which has lower incidence, whether it's health and safety or other issues. It doesn't always have to have a value attached to it. But to me, the perception of this industry can fundamentally change. We are under a glass ceiling. The sector has lost 80% of its specialist capital, partly cyclical. It is trading at a 4 or 5 times cash flow multiple. I see Keld here. And I think it traded at double-digit multiples back in the 1990s before China got involved. It has a low level of confidence and trust. We can change that on an individual company basis. Companies have done this. Agnico, B2 Gold, Lundin Mining family of companies, and others all have premium ratings because they have a lower risk, they under-promise and over-deliver because they have a lower volatility and a lower risk. And I truly believe that this is something which we can turn around. And I think actually sustainability is a huge gift for this industry if we were to see it in that light.
I would just add that, and I think it's a really good point, is that we do have a growing body of evidence of the non-financial benefits of sustainable mining. What we don't have is the financial co-benefits of sustainable mining investment, which have a strategic and long-term nature. And that's something that needs to be researched, because indeed miners would report a difference in perception with investors, because they think they're not looking for the same thing. But ultimately, if we can prove that they do, if we can put the numbers on the financial co-benefits of sustainable mining, that would really help.
The materiality of social license is pretty well established, isn't it? I think having a trusted mining sector is one that enjoys a social license. In recent years, there was in Panama, First Quantum lost its social license. Their mine has had a significant impact in relation to losing the social license there. In the Pilbara, Rio Tinto's choice to explode Juukan Gorge, even with a 12-year-old agreement with the local PKKP people, ultimately led to the departure of the CEO and the chair. So clearly material considerations when it comes to the kind of negative side of sustainability, what you can lose if you lose that social license. So thinking about the costs of sustainability, the costs of operating good standards, we tend to think about it in those terms. There's kind of high reputational risk, high challenge, whereas it can be a little bit more transactional if you're at the operating level. We kind of tend to think about that longer term commitments, longer term impact.
I was fascinated. You brought up the point on Rio and others. I mean, it was fascinating listening to Tristan of First Quantum and Jakob of Rio Tinto the other day, both standing up and putting their hands in the air saying, we've messed up. In case of Jakob, he was talking about Serbia, where they lost their social license to operate. And he said, we completely messed up. We have not recognised how we've got to communicate with the next generation. I believe I read a statistic the other day, 75% of the world's working population next year will be millennials and Gen Z. Have we asked ourselves how we're talking to them? Do we know what they want? They are, in every single survey, sustainability is at the top end of that, in the top 2 or 3 points. And as Jakob said, putting out a 3,000-page environmental impact assessment to these people and saying we're going to be great citizens and operators doesn't work. So we've got to get into social media. We've got to provide the information earlier in channels with which people can understand to avoid the disinformation, which effectively then gets out to create the problems that they have. So there's a fundamental transformation that I believe from communication, but also from quality of information and transparency and credibility of that information that needs to then come out to effectively win this battle. And it is a battle of information. You know, the sector's trade is now less than 2.5% of the MSCI. It's irrelevant and largely ineligible for investment. But that is a changeable thing. That doesn't have to stay. It's not a permanence. So the opportunity is there. And frankly, thanks to my other panelists and all the work that's being done by them, really I just go onto the coattails of all these people. But I think the opportunity is there. We just need to communicate it and actually put out our front foot forward. I think I say this with some trepidation, but too much apology now has been going on for too long when this industry does so much good. You know, whether it's hospitals or schools or housing or whatever it is on these mine sites. So much good is done. All of this fits into the E, S and G, but we don't communicate it in a way that wins us brownie points or valuation or perception.
Yeah, transparency is hugely important, even when it's not your front foot topic. So you mentioned Rio Tinto. I think they're to be commended for a couple of years ago releasing a report that did not paint them in a good light on sexism in their business. That sort of transparency is important, even though it's not kind of social media, the sort of social media headlines that you might hope. Still important.
I'm just going to jump in. Look at the valuation difference between BHP and Rio Tinto since that report. It's completely reversed its discount.
But yes.
Okay, so let's look at the business case for responsible mining then. How would you pitch the value addition it provides for companies? Throwing this to anyone.
I think we've talked quite a lot about the controlling for downside risks, about attracting capital, about reducing the cost of capital, about finding even cheaper insurance. We've heard anecdotes of companies that have adopted the global industry standard on tailings management and achieved lower insurance rates as a result of that. So I think across the sector, I think it's hard to pin down, but there are plenty of examples of risks mitigated, costs avoided, and trust generated through sustainable practice.
I mean, there's not much more to add, I think, because I think we've covered a lot of this. But, you know, okay, the exploration companies want to go out there and get their 10-bagger and make their discovery and everything, but that's still got to be done with the local community on side. And yes, it has lower requirements because it's not operating a facility, but that doesn't, to have a local community suddenly going against your drilling suddenly nullifies your whole value of your company. So the business case from start, and many of these leaders in these conferences in the last few weeks have highlighted, we've got to start this from day one. And I know we've got an exploration company on our books who have gone through Digbee a couple of times. He said, we've done this because we know we're going to be doing transactions on these deals. And we need the First Nations people absolutely day one on side. Otherwise, these transactions don't get completed. So I think we've talked a lot at the risk mitigation from the top already. I don't think we need to go over that again. But to me, the business case is this is absolutely embedded from day one, to the extent that if we don't do this, the situation of social license to operate is getting worse. Many of the other area risks actually are getting better, but the social license to operate is getting worse. And that is largely because we've not addressed this in the way that populations and others are able to ingest this and ultimately come on side. And we're all connected. And connection these days is therefore leading to disinformation and other things, or unbalanced views.
So to wrap up, and I'm asking this to each of our panelists, in an ideal world, what would you like to see? Maybe just one thing each.
Well, I think the current context with the recognition that the mining plays a key role for the energy transition, and we've talked a lot about that. I think it's such a huge window of opportunity for mining companies and for investors to really bring the sustainability to the forefront of their thoughts and manage their projects in a manner that does create goodwill and more favorable perception. And I think that's really an opportunity to be seized, and now is the time for it.
I'd like to see more investors leaning into the sector to understand and try and address the challenges and the opportunities that are faced. Improved standardization and the achievement of those standards in a transparent, verifiable way that can then be used by investors to do proper benchmarking and make sure that we're allocating effectively to best practice and where the opportunities are.
Well, on the basis of those two answers, which really covers everything, I'm going to be completely commercial and saying I set up Digbee to make this industry a better industry and to incorporate the IFC standards, which we've put into our frameworks. CSM, the new consolidated one will be involved, plus 25 other standards in there. We believe in the future-looking capabilities of KPIs to hold people accountable and therefore to drive new investment into this industry. So my ask is every single mining company in the world is to come onto the Digbee platform, and then we can effectively have a better industry for everybody, including stakeholders out in the field.
Thank you very much to our panelists for a very insightful conversation on a very important topic in the industry. So thank you very much.
Thank you very much.